Welcome back to Talk Tickers, where we like to say we do the hard work of listening to these earnings calls so you don't have to. Today, we are going to do a deep dive into Target's Q4 2024 earnings call.
They had a really interesting year. It was kind of all over the place, but I think what's most important is they seem to have finished strong, right?
Yeah, that's what everyone's talking about. So their Q4 comparable sales, those beat expectations, they reached a 1.5% increase. Not huge, but still pretty good in this environment, I think a lot of people would say.
Yeah, and their adjusted EPS, so their earnings per share, those hit $2.41, and that actually ended up exceeding even the top end of their projected range. So that was a really, really positive sign. I think that definitely gave people a little bit more optimism, right? Especially with so much economic uncertainty in the air.
Yeah, Target's definitely showing us they can be resilient. So let's kind of zoom out a little bit and look at the whole year, the full year. I was actually kind of surprised to see that their full year results, those ended up landing within their projected range.
Yeah.
You know, we saw so much volatility this year, up and down and all around.
Right, exactly. You know, you'd think they would have veered off course a bit, but no. So their full year net sales, those actually increased by 1% compared to 2023. And get this, if you adjust for that 53rd week that 2023 had, then the EPS, their earnings per share, that actually went up by about 3%.
Wow. So pretty solid signs that they are staying pretty stable. Now, one of the things that I was really interested in going into this was their digital strategy, because we've been talking a lot about how much they've been pushing, services like Drive Up and same day delivery. Did those things actually pay off?
Yeah, so it really seems like they did. Those services, especially the ones that are tied to that Target Circle 360 membership program, they actually saw double-digit growth. Yeah, it's pretty impressive. So it seems like that whole strategy of, mixing convenience with loyalty, that's really hitting the mark with people, with consumers.
Now, let's talk about Target Plus. That's their third-party marketplace, right?
Yeah.
I remember earlier this year, there was a lot of buzz about that.
Yeah, and it's really become kind of a powerhouse for them. Target Plus, their growth across all of 2024 was over 35% growth.
Wow.
Yeah. And get this, just Q4 alone, they experienced a 40% surge in their growth.
That's remarkable. And speaking of growth, what about Roundel? That's their media business, how they do.
Yeah, they held their own. So Roundel's doing really well. They saw a strong performance. I think their growth was somewhere in the mid-teens.
All of this seems to point to, a really deliberate approach by Target. So I'm kind of curious from your perspective, what really stands out to you about their overall strategy? Like, how are they positioning themselves for what's coming next? What's the future?
So one thing that I think is super clear is how much they're emphasizing reliability.
Right.
And consistency. So they're really focused on making their operations more efficient, especially when it comes to things like, how they manage their inventory and how they can shorten those lead times. And that seems like it's particularly important for their discretionary categories.
Yeah. And another thing we have to talk about, they're really pushing their own brands.
Right.
It seems like they really see that portfolio as a key way to stand out from all the other stores out there, all their competitors.
Right. So if you look at something like, for example, the Up and Up line, that relaunch, that's been really successful. And then All in Motion, that's another one. And that's seen pretty consistent growth.
Yeah. And, for Target, it makes sense.
Mm-hmm.
When they invest in these owned brands, then they have a lot more control over their pricing. They can control their margins a little bit better. And that could potentially protect them from some of those inflationary pressures that we've all been feeling.
Right.
And of course, we have to talk about today's Target, that whole strategy.
Yeah.
And it really seems like what they're doing there is trying to blend physical and digital retail, right? And they're trying to bring in trends from social media and really cater to lots of different kinds of customers.
Right. They're trying to capture that, that Target magic, right? That thing where people love going to Target, that feeling of discovery, that joy of shopping. And they're really good at incorporating social media trends. And I think, appealing to a diverse set of shoppers. That's really smart. So it's an interesting way to create an experience that's much more engaging and personalized for everybody.
And they're not afraid of technology. They're not shying away from it at all. They talked about leveraging AI, generative AI, all these different things to make their digital platforms better, to really personalize that shopping experience, and of course, to streamline their operations.
Yeah, it's clear that Target is trying to be innovative. They want to stay ahead of the curve, and retail is changing so fast. It's a really dynamic landscape. And so I think it'll be really interesting to see, especially with the AI, how they use it to improve their inventory management systems, to personalize those recommendations for their shoppers, all those things.
This is where it gets really interesting, don't you think?
Absolutely. I think Target's performance, the strategies that they've outlined, it really suggests that they're getting ready for a future where, I don't know, like physical and digital retail, it's all going to blend together.
So what does it all mean for investors? What should they be paying attention to? What should they be thinking about as they, evaluate Target and what the potential is?
Well, their performance is a really strong signal, right? It tells us that they're shifting to a business model that's way more resilient and adaptable to whatever comes next. And I think that focus on today's Target, it's really smart because it shows us that they get it. They understand that consumer behavior is changing and evolving all the time. And, they're really working to make the experience of shopping there really engaging, really fun, really enjoyable. I think for investors, they need to keep an eye on, those investments that Target is making and all their digital capabilities, how strong those owned brands are doing, and how well are they managing their inventory as we might face more challenges with tariffs, all those things.
They're really going beyond, I don't know, just selling stuff.
Mm-hmm.
Like they're creating a lifestyle, a feeling that customers really connect with.
Yeah, that's what makes them so interesting to watch, right? Because they're not just going with the flow. It's not just about reacting to trends, but they're trying to be the ones setting them.
Yeah,
And I think that is really powerful when it comes to retail.
absolutely. So, all right, let's put on our investor hats for a second here. How do we translate all of this into an actual trade idea? What are some moves investors could consider based on everything we just talked about with Target, their performance, and their strategy?
Now, remember, this is not financial advice, but let's brainstorm a little. What if you went long on Target and then short a whole bunch of traditional retailers, the ones who just haven't figured out this whole lifestyle brand thing yet?
Whoa, that's a bold move.
Yeah.
So basically, you're betting on Target to just grab a bigger and bigger piece of how people spend their money because they're different, right? They've got that unique mix of products and that whole shopping experience and, of course, value.
Exactly. It's all about recognizing that things are changing, that retail is not what it used to be. And you got to find those companies who are not just adapting, but the ones who are leading the charge, leading the change.
I like it. I like where your head's at. So, okay, let's kind of sum up our deep dive today. It seems like Target is really laser focused on a few things like reliability, consistency, and innovation. They seem to think those are going to be the keys to growth going forward. And that today's Target strategy, I think it's safe to say that's resonating with shoppers. And all those investments they've been making in their digital stuff, their own brands, those seem to be paying off.
Yeah, I think you nailed it. And, we covered a lot, but I want to leave our listeners with something to think about. What if Target actually became, I don't know, like the next everything store? Like they're going up against giants like Amazon, but not just on price, but on the whole experience of shopping. It's a big question, but I think it's one that's worth thinking about as we see Target keep changing and growing.
That's such a good point. It's going to be really interesting to see how they build on their strengths, and how they adapt, because the world of retail never stops changing, and neither do customers.
And we want to hear from you, the listeners. What do you think about all this? What parts of Target strategy really stand out to you? What questions do you have? We always love hearing from you, so share your insights with us.
Absolutely. We love getting those messages, reading your comments. And before we wrap up, just a quick reminder, this was not financial advice.
Always good to reiterate that, right?
Yeah, we're just two people who like to really dig into these earnings calls and explore what's out there,
And investing, it always comes with risk, right? So remember, do your research, know your own financial situation before you make any decisions.
Yeah, it's a crazy world out there, the retail world, I mean. But Target seems to be doing a pretty good job at, navigating all of that.
Yeah, they are.
So until next time, keep an eye on Target, and we'll see you on the next deep dive. Happy investing, everyone.